Hi, I'm Steve Dudash, IHT Wealth Management. Welcome to this week's Wealthcast. All right, I do get this question all the time, so I figured I'd touch on it. When we're buying into something, when we're getting into the markets or a stock or anything, what would you consider buy signals? What would you consider good reasons to buy into something? All right, and you can apply this outside the stock market, but just in general. And I always come back to the same three things, so I thought maybe I'd touch on it. One, is it a growing industry? Is it something that is going to continue to be used, or a service that's continued to be used and be used more as time goes forward? So cloud computing is one big thing we talk about. All of us use our phones more for data than we ever use it for actual phone calls, and it's only growing. More and more things that we can do on our phones or our iPads or whatever it is, the more data storage that needs to be put out there, the more security of that data needs to be put out there, the more ease of use of getting that data needs to be put out there. All of those things means that's a sector that will continue to grow in the future. So we look at what's growing, what's going to be used more. Two, does that company make money? That's the one a lot of people always forget. You know, they'll look at things and they'll love everything about it, and does it actually make money? Does it make a profit right now? Is it something that is sustainable? Because if it's not making money right now, with how good a lot of things are going on in the economy in the world, if it's not making money right now, what happens when the economy and the world events aren't as smooth as they are today? You know, people forget that things don't always go super smooth because it's been like 10 years since a real bad one. But if they're not making money today, if things go sideways, they're less likely to be making money. So one, is it a growing industry? Two, do they make money? And then three, valuation. And valuation is a little bit harder for everyone to grab onto, but ultimately what valuation means is, are you paying too much of a premium to get into that company? You know, it could be the greatest company in the world, but if you're paying 5 times what the company's worth, or what it should be worth, if you're paying extraordinarily more money to get into that company, then it's more difficult for you to make your money back. And therefore, even though it might be making money and it might be in a good industry, it might not be something you want to buy. The flip side is it really cheap? Relatively cheap right now. And if it is, and it's a good industry, it's making money, and it's relatively cheap, why is it cheap? And if you're okay with that why is it cheap part, that's when you jump in. So realistically, when I'm looking at stocks or I'm looking at any type of businesses, those are the 3 things that I really focus on. And if you check those boxes, you might not always be right, truthfully, but you're right more often than you're wrong. And that's the name of this game right now. So I hope all that helps. Just kind of break it down a little bit more fundamentals on it. And we'll talk next week. If you have any questions, call, email at IHT Wealth, or go to our website anytime. Have a nice weekend. Bye.